Hello students, welcome to RTP May 23 discussion session. Myself Professor Yogesh Patil, warm welcoming you on behalf of JK Shah classes. Now if you refer the RTP issued by the institute for May 23, there are 15 different questions covered. All 15 questions are from JK Shah classes study material. If you the questions of JK Shah classes study material, if you have attended all the class during your intermediate coaching, then according to me, understanding of RTP won't be the issue. Now try and understand, out of 15 questions, 14 questions which are covered in the RTP material. So we are going to solve all 14 questions in this session, and few important questions we are going to revise along with the basic concepts. So hope you all are ready. So let's start without wasting much time with question number 1, which is covered in RTP May 20. Now if you read the first chapter's name, it is your one of the favorite, and chapter's name is material costing. Whenever you are dealing with material costing, chapter you will be having 2 to 3 concepts. Concept number 1 of this chapter is economic order quantity. Concept number 2 of this chapter is different level of stock, and last concept which is covered in this is stock valuation by LIFO, FIFO, weighted average, along with few minor concepts. So whenever you are calculating the economic order quantity, for that purpose, just find out 3 elements. First one is annual requirement of raw material. Second is carrying cost annum, and after that the last part which is needed is your total ordering cost, but you should find out ordering cost per order first, then only you will be able to calculate EOQ. Let's see what all informations are provided. So very first question of B is based on material costing, which says Reliable India Private Limited is a startup company engaged in manufacturing of agrotech product from a raw material which is purchased at 190 rupees per kg. So 190 rupees per kg is the purchase price, which can be denoted as rate R. The company incurs a handling cost of 1470 plus freight of 770 per order. Both these amounts are expressed on per order basis, and that is why it is to be considered as material ordering cost per order. When you add up both the values, that is 1470 plus 770, you are going to get total 2240 as your material ordering cost per order. Next point says the incremental carrying cost of inventory. Let me highlight this word. Question itself is giving you clear-cut information about the carrying cost. You need not to worry, you need not to get confused while understanding and analyzing the question. It is straightforward question. The incremental carrying cost of inventory of raw material is rupees 3 per kg, but it is expressed on per month basis. Guys, whenever you calculate carrying cost of material, you always should express it on per unit and per annum basis. Here in this question 3 rupees is given, but they have expressed it on monthly basis. So if you want to convert it into yearly basis, simply you need to multiply it by 12. You will be getting 36 rupees as your first carrying cost element, which is covered in the question. Next point says, in addition to this, the cost of working capital finance on the investment in inventory of raw material is rupees 20 per kg per annum cost of working capital finance. It means whatever working capital, that is the capital which is needed for day-to-day work you have raised, if you have raised this capital through borrowings, on that borrowing certain cost you are incurring, and that cost is called as your carrying cost, because you have blocked this working capital in the material. So total 20 rupees is the raw materials cost and raw materials carrying cost. When you add this with previous given cost, you are going to get 56 rupees as your per unit per annum carrying cost. After that, the annual production is given, and here is the important point. Maximum students make confusion and mistakes while understanding this point. This point says that the annual production of the product is 1,50,000 units. Guys, this is not the annual consumption of raw material. This is the annual production of finished goods. Which means company's target is not to consume 1,50,000 units of raw material. Their target is to produce to 1,50,000 units of finished product. Question further says 3 units are obtained from 1 kg of material, and this is the information related to consumption of material. Let me give you clear cut idea about this. Whenever you are using 1 kg of raw material, after consuming 1 kg of raw material, 3 units of finished goods can be obtained. If company is planning to produce 1,50,000 units of finished product, then for that purpose, how much raw material is needed, that you need to compute, and if you compute this, you will be getting the amount of 50,000 kgs, and here is your annual requirement available. Now total 3 elements which are needed for EOQ computation are available with us. Point annual requirement of raw material, second point is ordering cost per order, and third point is carrying cost per order. Now assume 360 days a year, and on the basis of this assumption they have asked us to calculate economic order quantity first. If you want to calculate economic order quantity, first of all you should write the formula of EOQ, and EOQ's formula, you have used this formula for multiple times while solving various questions from classwork, from ICI material, etc. So if you want to calculate economic order quantity, first of all you should write down the formula for the same. Now if you are calculating EOQ and you are using formula, you must have used this formula for multiple times, but various things which we record in this formula is first 2 into A stands for annual requirement, and after annual requirement you should record the ordering cost, and entire this calculation we should divide by the carrying cost. Now please substitute the elements to this formula. Now it is 2 into A. Just now we computed A while discussing the sum, so it is 2 into 50,000 kgs of raw material. Into ordering cost we also calculated, and ordering cost according to our discussion is 2240, and 2240 per order is given, so we will multiply it 2240, and entire computation we should divide by using the carrying cost, and carrying cost which is given in the question is amounted to rupees 56. Now when you perform this calculation on your calci, 2 into 50,000 into 2240 divided by 56, and whole calculation square root, when you calculate you will be getting 2000 kgs as your EOQ. Now what is the meaning of this 2000 kgs? It means at a time we should purchase 2 kgs so that total ordering cost and carrying cost can get stabilized. After this, next point says determine how frequently company should order for procurement be placed. Question is asking us to calculate the frequency, and guys, whenever you are calculating the frequency, very first thing which is to be computed is number of orders. So here I am giving heading, we should calculate frequency, and for computation of frequency the first thing which is needed is number of orders. So here I am recording number of orders. Now question comes in our mind, how to calculate number of orders per annum. Now total requirement of material is annual requirement. Now when you divide this annual requirement by using quantity per order, you will be getting total number of orders to be placed during the year. Total annual requirement just now we computed, that is 50,000, and at a time in a one order we are going to purchase 2000 kgs. So when you do this calculation on your calci, you will be getting 25 on your calci, and this is nothing but 25 orders. So throughout the year, to complete the annual of raw material, we must place 25 order. Question's requirement is not to calculate number of orders. Question is asking us to find out the frequency, and frequency calculation, try and understand logically. Try to understand 25 orders, correct? No guys, 25 orders will be placing in a 360 days a year. It is given in the question to consider 360 is the purpose of. So total 25 orders will be in these 60 days, I just need to check what will be the period for one order. So if you cross multiply this 360 into 1 divided by 25, you will be getting number of orders here, and number of orders are 14.4 days. That means approximately after 2 days you are going to place the next order. So this is next order placement calculation frequency. Simply logically and understand, once 2000 kgs are purchased, you are going to use those 2000 kgs for the purpose of production for 14.4 days, and after that you will be placing the new order, and when that order gets delivered immediately, again you will be using that material for 14.4 days, and again you will be placing the. So this is the cycle which you are going to follow. After every 14 days you have to place the order, and after this last point of the question, which is not the list, this question is asking you to calculate some additional extra cost or discount to be negotiated. Let's read what is been asked here. Question says, if the company proposes to rationalize placement of orders on quarterly basis. Now quarterly basis means there are 4 quarters in a year. Entire yearly requirements is 50,000 kg of raw material. If you are planning to purchase this in 4 quarters year, so 50,000 divided by 4 quarter, that means company is planning to place the order containing 12,500 kgs at a time. If you are purchasing 12,500, what is EOQ says? EOQ says you should purchase at a time 2000 units, that is 2000 kgs. But if you increase the volume, if you increase the quantity to 12,500, means company is having 2 options, either to follow EOQ or to go for quarterly purchases. If company is planning to go for quarterly purchases, question is asking us to determine the percentage of discount in the price of raw material should be negotiated. Now very simple thing, if we use EOQ, according to model, EOQ cost is the minimum cost, correct? Going for a bulk quantity purchase, then for a bulk quantity purchase you should go and ask for a discount. That means you should have buffer with you. Now how much discount asking for? You are going to ask any random discount to your supplier? No, we need to find out this we negotiated in advance. Now calculate this discount. Simply we will calculate cost at EOQ, then we will calculate cost by not following EOQ, that is quarterly, and whatever will be the difference in both the cost, at least that must count for. Let me show you the calculation. Here I am presenting my solution in columnar form, where first column I have prepared for my type of order, and then 2 calculations I am showing, first where EOQ is followed and second where EOQ is not followed. Okay, so first column is for type of cost, then heading number next is EOQ is followed. Second possibility, when EOQ is not followed, and in both the cases we have quantity available with us. When you are following EOQ, then quantity to be ordered is 2000 kgs at a time, and when you are not following EOQ, that is quarterly purchases, we must purchase 12,500 kgs each quarter to fulfill the annual requirement. Now very first cost which comes in our calculation is called as total purchasing cost, and total purchasing cost we always calculate by using the formula of A into R. A stands for annual requirement. My annual requirement is 50,000 kgs, and this 50,000 kgs requirement will remain unchanged under both the possibilities, because yearly we need 50,000 kgs of raw material. I am multiplying this by using the rate, and rate is given on the first line of the question. See at what rate you can purchase the raw material. It is rupees 190 per kg. As discount is not available at present, we must consider total amount at both the places. So total is 95 lakhs rupees. 95 lakhs rupees is the purchasing cost. 95 lakhs rupees is the purchasing cost when EOQ is followed. Not followed, under both the cases purchasing cost remains same. Now try and understand purchasing cost can only be reduced when discount is available, but discount is not given. That is why we are calculating the discount by taking the same amounts in both the possibilities. Second calculation comes is TCO. This is the total cost of ordering, and this cost we compute by using this formula, that is A divided by Q, number of orders to be placed, multiply by ordering cost per order. My annual requirement is 50,000. So 50,000 I have recorded in both the columns. I am dividing it by respective quantities, and quantities are 2,000 and 12,500. When you divide it, you will be getting number of orders to be placed, and this is the calculation which is to be further multiplied with the ordering cost per order, and my ordering cost per order is 2240. When you multiply this, you will be getting one amount. Let's compute 50,000 divided by 2,000 multiplied by 2240 is equal to rupees 56,000. And in second case, 50,000 divided by 12,500 into 2240 is rupees 8960. Second cost is also calculated. Now there is one more cost associated with material, and that is total carrying cost. Total carrying cost we compute by using the formula of average quantity, that is Q divided by 2 into CI. Quantity when EOQ is followed is 2000, quantity when EOQ is not followed 12,500. This many kgs we need to maintain in our godown throughout the year. So to get the average of this quantity, we should divide it by 2, and it is to be multiplied with CI, and CI just now we computed while discussing the sum. It is 56 rupees, so I am multiplying it by 56. So simply it is 56,000. It has to be 56,000 because whenever you follow EOQ, your carrying cost both are equal. But in second case, 12,500 divided by 2 into 56 will give you amount of 3,50,000. Now when you add up all this cost, all three possible cost we have calculated, after adding up all this value, you are going to get total material cost. And total material cost in first case is 95 lakhs plus 56,000 plus 56,000 equals to rupees 96 lakhs and 12,000. So this is the simple addition of all the cost. 96 lakhs 12,000 is my total material cost when EOQ is followed. When EOQ is not followed, then your cost would be 95 lakhs plus 8960 plus 3,50,000. So it is 98 lakh 58,960. See, after going for bulk quantity also, you are paying more, which is kind of illogical thing. If you are purchasing in bulk, you should in lesser price. That means in discounted price supplier must offer this, but discount is not offered by the supplier. We are just planning to go for the quarterly purchases, so we should calculate margin of discount to be negotiated for in. So first of all, you should compare the cost and calculate the difference. Here extra cost, if you compute, then extra cost to be incurred is 2,46,960, means quarterly 246,960 is the additional amount. To bring your quarterly purchase option to the EOQ option, at least this much discount we should ask for. At least is the important point. We will try our level best to ask for more discount, but at least discount if you are calculating, so at least discount is 246,960. But question is not asking you to calculate amount of discount, question is asking you to calculate the percent discount. Guys, this we get on ordering cost, discount we get on carrying cost, or discount we get on purchasing cost. Always discount is asked while purchasing the material, that's why it is related with purchasing cost. Therefore, percentage of discount, let me write one word here, at least discount to be asked for is 2,46,960 on total purchase value of 95 lakh. If you want to express this answer in percentage form, you should divide it by 100. and in this calculation you will be getting approximately 2.60 as your answer. This is the simple solution for question number 1 based on material costing concepts. Let's start with the discussion of second question, guys. Second question is from employee cost, which is very simple and basic chapter. The exact question which is given in RTP is covered in JK Shah classes textbook. To be very precise, question number 14 from our textbook is same question. Now, out of entire employee costing chapter, the part which is covered in RTP is only labor turnover, and for the purpose of calculating labor turnover rates, they have given us some data. Question number 2 says that following information are available from the cost records of BMR Limited, and they are asking us to calculate labor turnover rate and labor flux rate. If question asks you to calculate labor turnover rate, you should use two methods always. One is separation method, second one is replacement method. And in addition to that, labor flux rate we always compute by using two different formulas. One formula without considering new joinees and second formula with considering joinees. Let's have a discussion what all data is given. Of employees as on 1/4/2021 9,400. These are the number of workers at the beginning of the year. After number of workers at the beginning of the year, they have given you one more number of employees on 31st March 2022. This is the number of workers at the end of the year. Now, when beginning and end workers are given, you should immediately compute average for that, and average computation is very simple. It's a simple average. 9,400 plus 10,600 divided by 2. Simply you will be getting 10,000 workers on an average. Now, during the year 160 employees left, 160 employees left, while 640 employees were discharged. 160 employees left by their own and 640 employees were discharged by the company. If you observe this scenario, in both the cases workers are going out. Whenever workers are going out, they are called as workers got separated from the organization, and 160 plus 640 total 800 workers got separated during the given year. And 1,500 employees were recruited. In all, inflow of employees is 1,500. Out of this, 400 employees were recruited because of exits. Because of exits, the vacancies got created, and on those places, new 400 employees came. So those new 400 employees are called as replacements for the company. So total number of employees got replaced were only and only 400. But sir, 1,500 employees, you are saying only 400 are replacement? Yes, which means remaining 1,100 are new joinees, new recruits for the companies, and 1,100 employees are joined your organization only and only because of expansion plan. If you are solving this sum by using all the methods of employee turnover, then very first method which we always use is called as a separation method. While solving sum by using separation method, always you should consider the total number of workers got separated during the year, and according to our discussion, total 800 workers got separated. Now, this number should be divided by average number of employees, and average number of employees are 10,000. When you calculate percentage of this on your calculation, you will be getting exact 8% rate. This is the rate of separation of the worker. After separation of the worker, the next method to be used is a replacement method, and as per given information, all the vacancies are not filled up by the personnel department, that is HR department. Only 400 employees were recruited as replacement for the exits, and when you divide this 400 employees by 10,000 and then you multiply it by 100, you will be getting exactly 4% rate of your replacement. So it concludes that 8% vacancies got created, out of them 4% replacements took place, still percent replacements can be done. In addition to that, if you want to calculate the overall effect of the labor turnover, that effect can be calculated by using flux method. But for using flux method, there are two ways. First, flux can be computed without considering new join, means workers separated plus workers replaced divided by average number of workers into 100. If you compute this, you will be getting answer of 12% for your calculation. But one more calculation is mandatory to calculate as far as flux method is concerned. 800 left, 400 replaced, and in addition to this, 1100 people newly joined your organization divided by 10,000 into 100. So if you calculate this, 1200 plus 1100 divided by 10,000 into 100, this will give you overall flux rate of 20% is the flux by considering your new Chinese. If you don't consider them, then your answer will be 12%. It is mandatory to solve sum by using both the formulas of flux method in your examination. Even if you check the suggested solution and suggested answers given in the RTP, everything we solved, same type of calculation you will see in RTP suggestions, and they have also computed your rates. First is a separation rate, after that they computed the replacement rate. Now one confusion comes in students' mind when they see this 11% calculation in the suggested answer. Let me give you simple example for this. If you have computed your flux rate by using all these methods, then these all are the mandatory answers. But if you check the suggestion given by the institute, they have only computed new recruitment percentage. So first they computed all the methods. They are replacement method, separation method, and after computation of separation and replacement method, next calculation which is covered here is only new recruitment, which is not asked anywhere, but in suggested solution it is given. So you can do this calculation also as far as exam point is concerned. Now after this, if you check the next point of the RTP, the third chapter which is covered in the RTP, overhead, and a very basic question is overhead chapter, and that question is based on primary and secondary distribution, that is allocation, apportionment and reapportionment of overhead. Let's have a discussion. Sandy Limited is a manufacturing company having 3 production department A, B and C, and 2 service departments are there, X and Y. Guys, again similar question is there in classwork section of JK Shah classes. JK Shah classes textbook costing May 23 attempt classwork question number 8 is exactly same as this question. You can check. Now if you check this, they have given you the budgeted information for December 2022. They have given direct material, but direct material we never consider as far as production department is concerned, but we always consider direct material for the service department. Hope you remember this. Direct wages of production department we never consider, because production department's direct material and direct wages we always record in prime cost. They are not overheads for us, they are only and only prime cost. But as far as service departments are concerned, these amounts we must consider, because all the expenses which are incurred in service departments are indirect expenses which are incurred for providing services to the production department. That's why these all are indirect expenses in nature. We must consider them. Next point says factory rent. Now if you check factory rent, amount is given, allocation is not given. Power 4 lakhs is given, apportionment is pending. Depreciation 1,60,000 is given, apportionment is pending, and other overheads 14,40,000, apportionment is pending. If you check the additional information, they have given you area's ratio. If you check, ratio is 2:1:2:1:2. Then capital value of asset is given in lakhs. It is 32 lakhs, 64 lakhs, 32 lakhs, 16 lakhs, 16 lakhs. It is 2:4:2:2:1:1. This is the ratio which is used. Now next one is machine hours, and after machine hours, horsepower of machine is also given. Now apportionment of expenses of service department, whenever you are doing apportionment of expenses of service department, that step is called as reapportionment. And for the purpose of reapportionment of the overhead of service department, they have given you certain percentage. If you observe this data, your department X, service department X is giving some services to Y, and service department Y is giving services to X, which means they are exchanging services between them, and that's why their nature is called as totally interdependent department. And whenever departments are interdependent, in that case you can solve sum either by using repeated distribution method or even simultaneous equation method, which is also called as reciprocal method. First, we should always check which method is asked in the question, and if method is not specifically asked, then you are having liberty to solve sum by using either or method. Let's read what is asked. Point number 1 says, prepare a statement showing distribution of overhead to various department, and the statement is called as primary distribution, where unapportioned overheads, this all unapportioned overhead, we need to bifurcate by using the ratio, and ratios are to be considered are given in the question. Now, most appropriate items we should consider. Most appropriate item for factory rent to be used is area. Power is to be bifurcated on the basis of HPRs. Depreciation is to be bifurcated on the basis of value of machine, and other overheads are incurred in factory and they are related to machine. That's why for that purpose we will consider machine hours. After that, if you read the next element, prepare a statement showing redistribution, that is reapportionment of service department expenses to production department using repeated distribution method. Method is mentioned, that means we can't solve this sum by using simultaneous equation method. We have to use the repeated distribution. Also calculate machine hour rate for the production department ABC, and for that purpose the entire amount of overhead we need to bifurcate, we need to divide using number of machine hours. Let's see what is the suggested solution. Now, very first, according to our discussion, if you have noticed, direct material and direct wages are not considered for production department, they are considered only and only for service department. Factory rent is the formula and ratio of 2:1:2:1:2, that is the areas ratio, and areas ratio we already discussed. See, this is the ratio, and entire amount of 6,40,000 is bifurcated in the ratio of 2:1:2:1:2. After, power is bifurcated on the basis of HPRs. Sir, HPRs, if you see the question, they have given you only horsepower and machine separately. Again, please focus on this point while calculating and while discussing the basis of apportionment. See what I have written over here. HPRs, you should consider HP into Rs as a basis, not only HP. Horsepower consumed by each and every machine is totally depends on the number of hours machine has been used. So for that purpose you need to multiply horsepower and machine, and this multiplication will give you 1 HP hours, and this HP hours you should consider for the purpose of allocation and apportionment of power cost. So here is 128,000. Then in second case, if you multiply, you are going to get 2,04,800. 1600 into 80 is 1,28,000. Then 3,200 into 64 is equal to 2,04,800. 6,400 multiplied by 32 is again 2,04,800. 1,600 into 24 will give you 38,400, and 1,600 into 40 will give you 64,000 rupees. So this is the ratio which you should use, and if you check here, the ratio is computed and they have shown this calculation as working note. The same ratio is been calculated. By using this ratio, they have bifurcated the amount of power, and after power, if you check the next expense, next expenditure is your depreciation. They must have taken the value of asset for the purpose of calculating the depreciation. Bifurcation of depreciation is based on the values ratio, and finally other overheads are bifurcated on the basis of machine hour. So exactly same ratios which are given. The only important point of this question was the HPRs and this part of the calculation. Normally students consider entire element which is given in the question, but please keep this element in mind. Whenever any direct cost for production department is given in the question, you should ignore that. You have to consider only and only direct material, direct wages, direct expenses of service department and the production department. So primary distribution is over. At the end of the table, if you check, you have got all departmental expenses, but to be very precise, these last two departments are service department. These expenses we haven't incurred for service department itself, we have incurred or service to product department. So we should bifurcate between the production department by using repeated distribution method, and in next table they have done the same calculation. See, the very first 7,60,000 they have bifurcated in 4 parts, and for that purpose they have used one ratio, and this ratio is given in the question. See, reapportionment ratio. X department cost is to be divided in the ratio of 72 is to 24 is to 48 is to 16, and the same ratio is been used. Then Y department, they took the total, that is 9,32,000, and this 9,32,000 they again divide in, because question says this Y department's overhead is to be divided in 3 parts. So same percentage they have applied for calculation. If you see the question, here is the end of first cycle. After this cycle, if you see, there is 46,600 balance in department number X. Now you must divide this, you must distribute this 46,600 between the remaining department again in 4 parts, and finally Y department also is been divided into 3 parts. This is the second cycle. Repeatedly you have to use the same ratio. You have to divide the bifurcation, the balance amount which is available with us, which is left with you. Finally, institute says third cycle should last cycle, whatever balance is available in last bifurcation, you should divide only and only between remaining department. So this is what is done in this question. And finally, the overheads which are available with us are only and only, see, no, service department overheads are vanished and entirely they have transferred to the production department. This overheads they have divided by using machine hours, as question is also asking us to calculate the machine hour rate. So this is very simple thing. Now out of 40 practical question, first 3 questions were very basic questions. First one was EOQ based, second was labor turnover based, only new recruitment, new point is shown in the suggestion, but that is not mandatory, and last one was overhead distribution. So hope you guys are revising everything on daily basis, not on daily basis, then 1 or twice a week at least, because you have to be in subject and to be in touch with all concepts, so that your calculation and your practice will not affect. Yes guys, let's discuss question number 4. This question number 4 is based on activity based costing, which is very basic and important chapter from exam point of view, and the same question is again covered in JKSC. Let's discuss this. Hygiene Care Limited is a manufacturer of a range of goods, and the cost structure of its different product is as follows. They have given you cost structure for hand wash, detergent powder and dishwasher. Material cost is shown on per unit basis. Labor cost is also shown on per unit basis. When questions say labor cost is 10 rupees per hour and they have recorded 45 in first column, that means to produce 1 unit of your hand wash, you spend 4.5 hours. Now second, 10 rupees is the hourly rate and you have recorded 60 here, that means 6 hours you have spent on detergent powder, and dishwasher making consumes 7.5 hours. So these are the number of hours which are needed for producing a single unit. Production overheads are given, and I am recording here in bracket, production overheads are absorbed. Sir, how you know production overheads are absorbed? This absorption related information is provided in next paragraph. Hygiene Care Limited was absorbing overheads on the basis of direct labor hours. See here, it is written Hygiene Care Limited was absorbing overhead, means presently company was using traditional method of apportionment of overhead, and that is your absorption, but their management accountant has now suggested that the company should introduce activity based costing system, and he has identified some cost drivers and cost pools as follows. All the overheads they have bifurcated into 4 parts, and those 4 parts are called as 4 different activities, are good receiving, inspecting and testing, dispatching and storage cost. The total associated cost is to be divided by using the given cost drivers, and cost drivers are available with us. Only one thing is missing, and that one is the total. That means the above cost, that 8,88,000, 26 lakhs 82,000, 6 lakhs 30,000, 36 lakhs, this all costs are to be divided in the ratio of the given parameters. If you add up all these values, you will be getting total, and accordingly you can use here. Now, if you check the suggested answer for the same, they have prepared one table, and in that table, if you observe, they simply prepared one statement, and that statement is statement showing activity based costing and apportionment of overhead. The very first activity which is recorded here is goods receiving, and this goods receiving activity is to be bifurcated on the basis of number of dispatch order. So total amount of 8,88,000 is to be divided on the basis of 8,88,000 is to be divided on the basis of number of dispatch orders, and here are the number of dispatch order. When you take the ratio of them, it is 6 is to 9 is to 10, and total 8,88,000 is been bifurcated in the ratio of 6 is to 9 is to 10. After that, second activity is testing and splitting. Total associated cost is 26 lakhs 82,000, which is given in the question. You can see here, and it is to be divided by using production runs, and here are the production runs. 1500, 2100 and 2400 is the ratio which is to be considered. It is 5 is to 7 is to 8. If you are not comfortable with the ratios, you can simply take the total of this element, like 1500 plus 2100 plus 2400 is equal to 6000, and this cost you should divide in three parts using 1500 divided by 6000, 2100 divided by 6000 and 2400 divided by 6000 ratio. You can check this, you will be getting the same answer because indirectly we are using the ratio only. So it's 26 lakhs 82,000 into 1500 divided by 6000 is 6 lakhs 70,000 and 500. Hope you are getting. Use your calci. 26 lakhs 82,000 into next one is 2100 divided by 6000 is 938,700. You can see here 938,700 and so on. Then all the cost, all the four activities they have used, and they have bifurcated by using the same ratio, and after by using the suggested ratio they have taken one activity based total cost. Total cost they divided by quantities, and after dividing it by quantities they have computed the total overhead according to the number of units. So this is your overhead, but this is overhead per unit. Now in this overhead cost per unit, and understand they have simply added material and labor. Sir, from where they took this 195, 180 and 195? From here they have calculated that. If you check this here, 195, 180 and 195, and in addition to that they have added overhead, but instead of adding overhead according to absorption, in first column overheads were given on absorption basis, and according to activity cost basis this is the amount of overhead. So they simply added both the things. So in short, material plus labor plus overhead per unit will give you this total. And here is the end of this discussion. This is the one of easiest RTP according to my experience. The previous RTP little tricky of new concepts, but in this RTP which is given for May 23, each and point which is covered is from our classwork section. So you need not to worry, you only need to practice all this something new. So total 4 questions out of 14 we discussed till now. Let's start next question. So here is one of simple and the easiest chapter which can be treated as backbone of entire costing, and that one is cost sheet. The question which is covered in RTP is again very base. Question is not asking you to prepare full cost sheet. Question is simply asking you to calculate cost of production, means only those elements we should consider which are related to cost of production. Later part which comes after cost of production we are not going to consider. So very first item is repairs and maintenance paid for plant and machinery. Always we record it as factory overhead. Insurance premium paid for inventories. Inventories related insurance we always record in factory because conversion of inventory takes place in factory. Insurance premium paid for plant and machinery. Plant and machinery related all the expenses are factory only. Raw material purchase we add to RMC, that is raw material consumed. Opening stock of raw material we add to RMC. Closing stock of raw material we deduct from RMC. Simply this gives us raw material consumed. Wages paid is direct wages for us. Value of opening work in process we always add it to gross factory cost. Value of closing work in progress we deduct from gross factory cost. Quality control cost we always add to the net factory cost. Research and development cost we also add to net factory cost. Administration cost. Now administration cost for factory and production, this is admin overhead, but this is admin overhead related to production, and related to production admin overhead we add to net cost. But other admin overheads are called as admin overhead general, and admin overhead general we add to COGS. But if you check the requirement of the question, we are not preparing full-fledged cost sheet, we are calculating COP, that means this is the item after COP, right? Now first cost of production comes, and after that cost of goods sold comes, and after cost of goods sold we add general administration overhead. So in short, this element we are not going to consider for the purpose of COP's calculation. Amount realized by selling scrap generated during the manufacturing process, this is sale of scrap, we must deduct it from net factory cost. Packing cost necessary to preserve the goods for further processing, this kind of packing is called as primary packing, and primary packing cost we should add to NFC. And finally salary paid to director related cost is also administration overhead, but it is again general category which we add to COGS, and therefore we should not consider it while calculating COP. That's it guys, you need to rearrange the things by using our cost sheet format. Let me show you the simple calculation. Now whenever you prepare cost sheet, you always start your presentation with first heading, and that one is direct material, which is also called as raw materials consumed, correct? I am underlining the heading raw material consumed. In raw material consumed, very first thing which we record is opening stock of raw material. In opening stock of raw materials, we added purchases of raw materials, and after that we deduct closing stock of raw materials, correct? Opening stock of raw material, purchase and closing stock are given in the question. Opening stock is 2,88,000, purchase is 64 lakhs. Closing stock of raw material is also available with us, and that is 4,46,000. When you take total, you will be getting your RMC. Please use your calci. 2,88,000 plus 64 minus 4,46,000. So it is 62,42,000. In raw materials, we add direct wages, and direct wages are directly given in the question, and amount of them is 23,20,000. Direct expenses are not given, that's why when you add up this, you are going to get your prime cost as a total. Prime cost is 85,62,000. After prime cost, we record factory overheads. Here is the secondary cost part starts. We underline the heading factory overhead. You need to list out all the factory overheads below this. See, markings are available with us. First one is repair and maintenance paid for plant and machinery. The amount is 9,500,000. Next is insurance paid for inventories 26,000. Next is insurance for plant and machinery 96,000. After this, if you check the entire information, no factory related information is there, so that's it. You need to take total of these three items. This will give you total of factory overhead 980,500 plus 26,000 plus 96,000. It is 11 lakhs 2,500. When you add this with 85,62,000, you will be getting 96,64,500, and this one is your gross factory cost. Gross term indicates adjustment of WIP spending. So after this we will add opening stock of work in progress. Then we will deduct closing stock of work in progress. Opening stock and closing stock of work in progress is also available with us, and that stock is 4,06,000 opening and 6,02,100 closing. Balance is 94,68,400. This one is your net factory cost. So your factory operations are over. After net factory cost, hope you remember the format of cost sheet. We always record 5 elements: research and development, quality control, prime, administration overhead related to production, and less sale of scrap. After adjusting this, it are cost of production. So let's record in the same order: research and development cost. The research and development cost is amounted to 92,600. Then you record quality control cost. Quality control is 86,000. Then you record primary packing. Primary packing cost is available with us in this statement. It is 10,200. Then we add admin overhead related to production, and admin overhead related to production is also available with us, and amount for that is 9 lakhs. After adding these 4 items, finally we deduct sale of scrap of buy and wastage, byproduct and wastage. Sale of scrap is 9,200. When you add up all these values, you will be getting your final answer of cost of production. So let's take total: 92,600, 86,000, 10,200, 9 lakhs minus 9,200. It is 10,54,000. It is 1 crores 5,48,000. 1 crores 5,48,000 is the answer of cost of production. So only this much format was asked in the question, no sheet. We simply ignored 2 items and we recorded the remaining elements in our format. Again guys, if you are solving this kind of sum, no, you need not to follow cost sheet format, but if you follow cost sheet format, chances of error becomes 0. So you always remember the order, no, that's why you are going to get full marks if you put all the items in the same format. But if you check the suggested answer, in suggested answer they haven't used any kind of format, they simply recorded all these stuffs. Prime cost, okay, after that there is no gross factory cost, there is no net factory cost, they haven't recorded anything and they have adjusted everything. Finally, cost of production same they computed, and in note it is written that administration overhead general and salary paid to director, these both are the general items and that's why they are not considered for the purpose of calculation. So this was related to the cost sheet. If you observe the discussion of May 23 RTP till now, first we discussed your EOQ concept, then we discussed employee costs, labor concept. After that we solved some on overhead, activity based costing and cost sheet. Everything was very manageable. So first, don't overthink, don't overburden yourself, because coming examination will be the best examination of your life. Be positive. You have to appear for the examination with 100% preparation, and I can give you one assurance that we will boost your confidence for sure. So let's discuss the next after this, and that is question number 6. Now whenever you are dealing with reconciliation statement, guys, reconciliation statement shows all the reasons for the differences in the profit as per cost records and profit as per financial record. So when company prepares both the records, obviously because of different rules of both the accounting, differences in profit comes, and those differences we have to show and analyze by preparing the reconciliation statement. See what is given in this sub. The financial record of Riva Limited showed a net profit of rupees 1,69,500 for the year ended 31st March 2022. Now financial records, see how they have started with their information. The financial records are showing profits, correct? But if you see, however, disclosed a net loss of 88,500 for the same period, but this is the net loss of cost record. That means company's financial accounting is showing profit, whereas cost accounting is showing losses. Done? Next point says the following information were revealed as a result of scrutiny of the figures of cost accounts and financial account. They haven't provided you the entire P&L, they have given you scrutinized information. Information number 1 says that the administration overhead under recovered. When question says recovered, absorbed, charged, these are the terms, these are the methods or techniques which we use in costing. That's why administration overheads are under recovered in cost. Now, what is the meaning of under recovered in cost? Try and understand. Here I drafted 2 P&L accounts. Now first of all, these admin overheads are your expenditures, and that's why this expenditure I am showing on the debit side. When questions say admin overheads are under recovered in cost, that means they are under recorded in cost. That means the amount is over recorded in the finance. How much is the amount is over recorded in the finance? 63,750. This much is the amount which is recorded in finance, but same amount is recorded on the lesser side in the cost accounting. This is the meaning of this information. If you have understood this, try and answer next question. Factory overhead over recovered in cost. Whenever nothing is mentioned, it is in cost, because recovery absorption takes place in costing also. Now factory overhead over recovered means they have recorded on the higher side in costing. That means they are under recorded in finance. So if you write here your factory overhead, then factory overhead, check the amount. Amount is 337,500 and it is overcharged in costing. So I am recording 337,500 in costing and I am recording nothing in financial P&L. Hope you understood this. After this, next point is depreciation undercharge in cost account. Now depreciation is undercharged. First of all, depreciation is also expenditure that I am recording on the debit side. It is undercharge in costing, means costing carries lesser amount and finance carries 65,000 higher amount. See, this information serves the meaning, serves the purpose. Whatever information is given, according to the given information, I am only segregating the amount. If it is under recorded in costing, don't record in cost, record in finance. If it is over recorded in finance, record in finance, don't record in cost. It's all about the wordings and understanding of concepts. Next point says dividend received 50,000. Dividend received is an income. So first of all, dividend and all other incomes comes on the credit side. But if you are dealing with costing, in costing we never record any income, we record only two incomes, sale of finished goods and sale of scrap. We never record other incomes in costing, but this income we record in financial account, and dividend received is 50,000, which I am putting on the credit side of my financial P&L account. If you see the next element, loss due to obsolescence charged in financial account, question clearly says this loss is to be charged to financial account. So this is abnormal loss, which I recorded in both the account, but I am following the instruction. It is not recorded in cost, it is only recorded in financial P&L 42,000. After this, income tax is given 1,09,000. Tax we never record in cost because it is not product related expenditure, it is profit related expenditure. So income tax I am recording only and only in financial account, and that is amounted to rupees 1,09,000. After this, next item is bank interest. Now bank interest credited in financial account 34,000. So on the credit side I am recording interest, nothing is to be recorded in costing, but this interest is to be recorded in finance, and it is amounted to rupees 34,000. It is also recorded. Next point, value of opening stock is given. Both the opening stocks we are going to record in cost and finance. So let's put here to opening stock. Here also I am recording to opening stock, and amount of opening stock if you compare, it is 4,12,500 in cost, but financial valuation is different, it is 362,500. So these all are the reason in fact of differences in profit. Now when you are recording both the items at same level, there won't be any kind of difference. If there is a valuation error, if there is a parameter error or a difference or basis which you have taken for the measurement of elements is different, obviously profit has to be different, and they have given you all the information for the differences. Closing stock we always record on the credit side. Costing closing stock is 313,750. And financial closing stock is also available with us. Financial closing stock is 3,30,000. Next item, goodwill written off in finance 62,500. Nothing is to be recorded in costing because amortization and intangible asset written off we never consider in cost sheet. Notional rent only to be charged in cost account, it's imaginary rent. Now if you read this sentence, how they have given notional rent of the own premises you own, and still you are recording rent, which is not possible in finance. It is not allowed. Costing it allows. Sir, why notional items are recorded and allowed in costing, sir? Any reason? Cost records you prepare on estimated basis in the beginning of the year when cost is not been actually incurred. So if you are estimating that rented premises you are using in the coming future, you will be providing for the rent for the same. But in finance, financial record you always prepare at the end of the year when accurate cost is available and actual event is being incurred. In that particular case, you are going to come across the information about the rent or the actual premises which you have used, then accordingly actual values only you are going to put in the finance. That's why errors are very less in finance, but errors and drawbacks are very more in costing because of only one thing, it is based on estimation. So notional rent is also recorded here. Notional rent is recorded in finance, it is recorded in costing, it is not recorded in finance. Next item is provision for doubtful debts 37,500. This provision is charged to the financial P&L, but this provision we are not recording in our costing. So simply I segregated the given information in finance and in costing. See what is asked in the question. Prepare reconciliation statement by taking costing net loss as base. Starting point is given in the question, and whenever you are starting with costing, very first thing, costing you should start with plus minus Finance you should start with minus and plus. There is one more alternative. Losses adjustments can also be started with negative figure, but in that case you have to give plus minus sign. If you want to start with a positive figure, in that case reverse the signs, don't get confused. Simply whenever you are starting costing profit or costing loss, you should put plus sign and minus sign to the debit and credit side of costing, and opposite signs are to be given to the financial P&L. This will simply give you the accurate answer. Now if you check the suggested answer, they have started with the net loss as per cost account, and net loss is recorded 88,500, which was given in the beginning of the question. 88,500, it is there. Now let's compare each and every item which we have recorded here. Now when you compare admin overhead 63,750, and above that sign which is given and recorded is minus, you can check the suggested solution. Administration overheads are recorded under deduction, so this is deducted. Next element, if you compare your factory overhead with factory overhead, compare the higher amount is 337,500, carries plus sign above it, and that's why factory overhead figure is recorded in addition. It is that simple. Only you need to, and accordingly you should start posting. Now try and understand what is the meaning of this. Cost accountant is trying to bring financial record to his level. Now if you check the administration overheads are not recorded in the cost, right? No. Now they are recorded only in the finance. They are recorded in the finance. To bring that information costing level, you have to deduct them. Then only it will be coming to the costing level, because it is not there in costing. It is there in finance. So to bring down to the costing level, you have to deduct that. On the opposite side, factory overheads are there in costing, they are not there in finance. If you are going to bring them to the costing level, you need to add them. This is a logical explanation for the adjustment, but in exam you can use the magic. Depreciation 65,000 is there in finance, and above that sign is minus, so you can check here depreciation is recorded under minus adjustment. Each and every item you should compare. Abnormal loss 42,000, income tax 1,09,000. Both these items are deducted. You can check there, your income tax and abnormal loss has been deducted. Next element, when you prepare this kind of working, now things become easy. There are 0% of error, you will be getting the full marks. Opening stock 412, opening stock 362,500, higher amount is 412. So 412,500 minus 362,500, difference is 50,000, and that 50,000 is higher in the costing and it carries plus mark. That's why it is added. You should check that. See here, difference is added in the opening stock. After that, go in a straight way. Goodwill written off, you can record in finance. You are not allowed to record goodwill written off in costing. So 62,500 is a less adjustment. You can write, you can record this, you can see this, it is recorded under deductions. After that, next is notional rent is there in costing, it is not there in finance, so notional rate is to be added. You can check notional rent is there in addition thing. Next item, on the debit side, bad debts are there in finance, so bad debts, provision for bad debt you should deduct. You can check provision for bad debts is deducted. Let's go to the credit side. On the credit side, dividend and interest are recorded in finance, but they are not there in costing, so sign above them is plus. So dividend and interest, you can see here, dividend and interest are added here. So each and everything is sorted. Only it's a game of accurate sign. If you are starting with costing, you should put plus minus. If you are starting with finance, you should put plus minus to finance and opposite side to costing. And last element to be compared is closing stock 330 and 313. You should calculate in this kind of event. Always difference is 16,250, which is higher in finance, so it is to be added. You can check 16,250 is added. Everything when you adjust, you are going to get the final answer which is already given. If you started with cost account, ultimately you are going to get the financial P&L as your answer, and this answer is already given in the question. You can see here 1,69,500. Only that segregation and sign allocation is important. So this was the reconciliation statement. Hope guys your concepts are getting cleared, your concepts are revising also. Let's start in question number 7. The chapter which is covered is very easiest chapter and continuation to the cost sheet. The chapter's name is job and batch costing. Again, the question is covered in JKSC textbook. A jobbing factory has undertaken to supply 200 pieces of a components per month for the ensuing 6 months. Every month a batch order is opened against which materials and labor hours are booked at actual and overheads are levied at a rate per labor hour. So in this paragraph they have given you simple information. Order quantity is 200 pieces per month. In 6 months data is given to us. Question simply says that every month a batch order is opened against which material and labor hours are booked at actual. Means every month they are starting with a new batch and by the end of the month they are completing with the same. Month changes, batch also changes. Overheads are levied at a rate per labor hour. That means question is saying you to calculate the absorption rate of overhead, and absorption rate is to be computed by using labor hour method. So here overheads divided by labor hour is the formula we should use for computing the absorption rate of the overhead. The selling price contracted for is 80 rupees per piece. So this is selling price per unit, and from the following data compute the cost and profit per piece. Means question is asking you to calculate CPU and PPU. Sir, what is CPU and PPU? CPU is cost per unit and PPU is profit per unit of each batch order and overall position of the order for 1200 pieces. That means we need to calculate the CPU and PPU for independent batch for every month, and when there is a order of 1200 pieces at a time, overall job is of 1200 pieces at a time, how much will be the profitability of the company? That is also to be computed because it is asked in the question. If you see the months, they have given you months starting from January, then February, March, April, May and June. Guys, these are not months, these are the batches. Total 6 batches information is available with us. Now batch output is quantity. Each and every batch, if you see the quantity, you have produced different quantities. Though in first paragraph it is mentioned that 200 pieces of a component per month, but at actual, if you check the quantities which are produced by them are different. Now material cost, that is direct material cost associated with each batch is given to us. Direct wages cost is given, and instead of giving overhead they have given you direct labor hours. Direct labor hours, when you multiply with the absorption rate of overhead, this will give you the amount of overhead simply. But now question comes, sir, how to calculate absorption rates of overhead? Now for that purpose they have given you overheads, they have given you direct labor hours. Only you need to divide these two items, and by dividing them you will be getting the monthly absorption rate for the company. Now absorption rate for first case, the overall. Student always asks, sir, what's the difference between first information and second information? First information was related to the batch only, and second information is related to the overall operations of the company. In the month of January, the overall overheads incurred are 1,20,000 and it is divided by 4,800 overall number of direct labor hours. So you are going to get here rupees 25 as your absorption rate for the month of. Then 1,05,600 divided by 4,400 will give you absorption rate of 24. Then 1,20,000 divided by 5,000 will give you absorption rate of again 24. After that 1,05,800 divided by 4,600 will give you absorption rate of 23. Then 1,30,000 divided by 5,000 you will get absorption rate of 26, and finally 1,20,000 divided by 4,800, again you will be getting absorption rate of 25. Now these all absorption rates are given, and question is asking us to calculate the cost and profit per unit. For that purpose you need to first calculate the total. Sir, how to calculate the total cost. Direct material, then you should add direct wages, and in that when you add overhead you will be getting total cost. This total, when you divide by total quantity associated with each and every batch, you are going to get the per unit cost. If you check the suggested solution, they have done the same breakup. Very first quantities are recorded, this is the batch output, and after recording quantity, now they recorded all the material cost, all the direct wages and all the chargeable expenses. Sir, how they computed the chargeable expenses? Now for the purpose of calculation of chargeable expenses on your batch, you worked for 240 hours in the month of January and the applicable rate is 25. If you use your calci, 240 into 25, you will be getting 6000 and the same value is recorded here. Same way, for the month of January, 280 hours worked on job and overhead rate for month of February is 24. When you multiply it by 24, you are going to get 6720 and so on. So this calculation is simply done by using absorption rate and number of direct labor hours for a particular month. Now this one is the total taken horizontally, and once this is done, after that they have taken the total. This is the total cost. When you divide total cost by number of units, you will be getting cost per unit. So you can check that total value divided by number of units. So total value is 13,700. Printing error is there, 110 is missing from this all the calculation. When you divide this 13,700 by 210 units, you will be getting 65.2 approximately, and the same thing is recorded here. Now directly profit per unit can be computed. 8 rupees is the selling price. I guess 80 rupees is the selling price, not 8. From this selling price 80 rupees, when you deduct the CPU, profit can be easily calculated. Now for first month January, 80 minus 65.2 will give you 14.8. Then 80 rupees minus 72.6 will give you 7.4, and so on. Everywhere profit is computed. Question is not only asking you to calculate the monthly cost, they have asked you to calculate one more thing, and that one is the overall calculation. If you read this line, overall position is asked when 1200 pieces are sold. When you sell 1200 pieces, by selling them at 80 rupees, you are going to get 6,000 as your sales value, and 1200 pieces on an average, the cost is 73.8. Sir, how this 73.8 is computed? Your total cost horizontal 90,250. When you divide by total number of units are 1230, you are going to get 73.37 approximately, that is 73.4 is calculated, and after that, that is simply multiplied with the 1200 pieces, and finally profit for all 1200 pieces is computed. Sir, what is the difference between first and second part of solution? In first part of solution, we computed profit and cost on batch wise, and it meant we prepared for the entire order. When someone is placing order of 1200 units all together, then what will be the total profit that is shown here, and this is the end of sum. The same question, when if you remove 110 from all the calculations, no, the same question is there in your textbook of JK Shah classes. Repeatedly, after solving each and every question, I am saying the same thing, because entire RTP is from JKSC textbook. If you revise our book twice before your examination, you need not to spare extra time for this RTP preparation. Everything we are revising with this RTP here. Let's discuss and solve the next question, which is based on contract costing. See, in question number 8, contract costing, contractors and civil engineers are building a new wing to a school, and the quoted fixed price for the contract is 30 lakhs. That 30 lakhs is nothing but contract price for us. Work commenced on 1st January 12 and is expected to be completed on schedule by 30th June 2013, means more than 1 year your contract is going to run. Data relating to the contract at the year ended 31st March 2013 is as follows. Very first, Plant sent to site at commencement of contract. So this is the cost of plant which you send to the site. This value is depreciable. Hire of plant and equipment. This is also higher charges for plant and equipment which we are using. Material sent to site, we record on the debit side. Material returned from site, we record on the credit side of contract account. Contract account is a nominal account like P&L. Whatever expenses you are going to incur, those expenses are to be recorded on the debit side, and income and closing stocks are to be recorded on the credit side. Direct wages paid, debit. Wage related cost, debit. Direct expenses incurred, debit. After that, next item is given. If you see, the next information covered in the question is supervisor staff salaries. Direct supervisor, indirect supervisor, both are the supervisors, both of them are getting paid, and both these salaries are related to your contract, that's why to be debited. Regional office expense, a portion to contract, this is a portion to contract, and that's why it is to be recorded on the debit. Progress payment received is cash received by the contractor. This is the part of payment which is received, and part of payment is a part of work certified which is received by the contractor. Additional information says plant is to be depreciated at a rate of 25% per annum following straight line method with no residual value, means scrap value is not there. Now try and understand, when you charge depreciation, there are two methods of showing depreciation. Directly you can record depreciation on the debit side, or alternatively you can record plant on the debit side at cost, and then on the credit side again you should record the plant, but you should record at WDV. The difference between cost and WDV is depreciation. Choice is all yours. If you are recording debit side only depreciation, you are going to get marks, so don't worry. This is the depreciation related discussion. Unused material on site. Unused material at site is a closing stock at site, are estimated at 50,000, and closing stock of material we always record on the credit side. Wages owed to direct workers, total rupees 40,000. Wages owed means wages payable, and wages payable are to be added to the wages. Budgeted profit on the contract is 8 lakhs. 8 lakhs rupees is the budgeted profit given. Value of work certified is also given, and surveyor has not certified the work uncertified is given at cost. You are required to prepare the account for the school contract for the 15 months ended 31st March 2013 to calculate the notional profit to the date. Now you need to prepare contract account in a horizontal form, and if you check the horizontal contract account here, very first on the debit side plant is given. This is the cost of the plant, and after cost of the plant on the credit side, this one is the WDV of plant. Now if you check the depreciation rate, it is 25%. So 2,40,000 minus 25% will give you 1,80,000. So 1,80,000 is 1 year's depreciation. Try and understand, you are preparing contract account for 15 months, correct? No? This is the requirement of the question. You can say 15 months. Now depreciation if you are charging, then the original cost is 2,40,000. It is to be charged at 25% for 15 months. So 15 monthly calculation you need to perform, and when you calculate this you will be getting 15 monthly depreciation of the given data, and after charging depreciation you are going to, means first you charge depreciation for 12 months, then you charge depreciation of 3 months, then 3 monthly depreciation and yearly depreciation. When you add, you will be getting your total depreciation of 75,000 rupees. So 2,40,000 minus 75,000 is 165. Sir, what you said, can you please repeat? Yes, why not? Now if you are charging depreciation at a rate of 25%, then 2,40,000 into 25% will give you 60,000 depreciation, but this is for 12 months, correct? No? Now if you want to calculate depreciation for 15 months, then simply multiply it by 15 divided by 12. You will be getting depreciation for 15 months, and 15 months depreciation is 75,000. 2,40,000 minus this will give you 1,65,000 is written down value. This one is the cost. instead of recording cost on the debit side and WDV on the credit side, you should record the difference on the debit side, that is depreciation. Depreciation is 75,000, simple calculation. Hire of plant, material, wages plus outstanding, wage related cost, direct expense, supervisory staff salary, then supervisor indirect, regional office expense, head office expense, surveyor fee. All the expenses are recorded on the debit side. You need not to think only. This is the simple and straightforward question. On the credit side, if you check, they have recorded material written, they have recorded material carried down. This one is the closing stock, and value of work certified and uncertified is recorded. Simply you need to close this account and you need to calculate the profit. That's it. Now till now, whatever sums we discussed and all were basic questions. No additional point came outside the syllabus till now. Let's see what other questions are saying. Next question is simply based on process costing, and this is the very important chapter from exams point of view. Process costing, there are three types of question. Question number one is simple question where institute will ask you to prepare process account, normal loss account, abnormal loss and abnormal gain account, and finally P&L account. Second category comes where inter-process profit comes. But here in this RTP, the chapter's point which is covered is your equivalent production, and equivalent production category is considered as very vital category as far as May 23 exams are concerned. So let's have a detailed discussion of this question. This is the full-fledged question of process cost. Limited is engaged in the production of flavored milk. Its process involve filtration and boiling of milk. After that, some sugar, flavor, color is added, and then letting it cool to fill the product into clean and sterile bottles. For producing 10 liter of flavor milk, 100 liter of raw material milk, that is raw milk, is required. So it is simply given 10 liter of output requires 100 liters of input. So for every 100 liter of raw milk, you will be getting 10 liter of flavor milk, which extracts only 45 liters of standardized milk. Means only 45 liters standardized milk you are going to extract by using 100 liter of raw milk, and this is very point of this question. We'll be discussing this point along with the remaining data. Let's read the further information first. Following information regarding process 1 has been obtained from the manufacturing department of Dairywala Private Limited for the month of December 22. Work in progress 13,500 liter milk is given, and this 13,500 liter is my opening WIP. Now value related to this 13,500 liter is given: milk, labor and overhead. Here milk is your raw material, labor and overheads are given. If you add these figures 150 plus 45 plus 135, you are going to get 3,30,000. So 3,30,000 rupees is what? This is opening WIP's value. This is the value of opening WIP which is to be recorded on the debit side. But if you check here, no, degree of completion for opening WIP is not available with us till now. Milk introduced is fresh input for us, and fresh input also to be recorded on the debit side. Direct labor debit side, overhead debit side. Abnormal loss is directly given in this question. We need not to compute any abnormal loss by preparing any kind of working. Abnormal loss we record on the credit side, but value is not available. Degree of completion for abnormal loss is given. Closing WIP 27,000 liters to be recorded on the credit side. Degree of completion is given. Then degree of completion, after that milk, labor, overhead. Milk transfer to for packing is your output. This output is also provided to us. You are required to prepare using average method, and average is weighted average method, and in weighted average method opening WIP's degree of completion is not needed. Opening WIP's degree of completion is only and only needed while solving sum by using FIFO method. Weighted average is one of the easiest category of sum. Now they are asking us to prepare a statement of equivalent production, statement of cost, that is CPU computation, statement of distribution of cost, and distribution of cost is the valuation, and finally they are asking us to prepare process 1 account also. Let's check what all information is provided to us. Now, according to the information, very first, if you prepare a statement of equivalent production, then something like this you are going to record. See here, first working is not needed because abnormal loss is available with us. Now, in process account, if you are going to start with your presentation, in process account on the debit side, you should record all the expenses, and expense number 1 to be recorded on the debit side is opening WIP. So I am starting with posting. The opening WIP is quantity is available, and quantity is 13,500 liters, and the value we computed just now 3,30,000. After opening WIP, next item to be recorded is material introduced. This is material input which is freshly introduced in the process. Quantity is 3 lakhs liter, 15 lakhs is the value. After this, two more elements come on the debit side. They are labor. We never express them in quantitative form because they are the expenses. Their values are 6 lakhs and 18 lakhs. On debit side, one more item we record, and that one is abnormal gain, but abnormal gain is not there in this question. So credit side we always start with normal loss. If you observe the question, normal loss related information is covered somewhere in the question, and this is the important point that we need to calculate. If you focus on this particular case, now try and understand, whenever you are going to introduce 100 liters of raw material, this is the important point. Earlier I said we will discuss this point later on, and this is the point where this discussion I am doing. Now 100 liter of raw milk is required, means whenever you are going to put 100 liter of milk, that extracts only 45 liters of standardized milk, and that standardized milk further processed into the flavor milk. So for very first process, if you are introducing 100 liters of raw milk, you will be getting how much standardized milk? 45 liter, and that means 55 liters milk is a loss for you, and that 55 liters is called as your normal loss, and that normal loss I am expressing as a percentage of input. If you check, 100, 55 lost, 45 standardized milk produced, that means 55% is your normal loss. And on the credit side I am recording normal loss. Sir, 55% of what? Your raw milk, and that is 3 lakhs. 3 lakhs into 55% is 1,65,000 is my normal loss which I recorded here, and it is to be valued at scrap. If you read the entire question, there is no scrap value given anywhere. Please check one more time. No scrap value is given. That means it has no realizable value, that is lost. After that I am recording abnormal loss. Abnormal loss is of, given in the question, abnormal loss is of 3000 liters, and 3000 liters abnormal loss I am directly recording in my solution, 3000 liters. Valuation is pending. Then on credit side we record output, and actual output is also given in the question. See here, your output is available. Total you produce 1,18,500 milk, and finally you record closing WIP. Still under process milk is there, and closing WIP is at 27,000. Now once this thing is recorded, you need to take total of quantity. First you should always check whether your quantity column is getting tallied or not. So debit side quantity column is 3,13,500. Take the total of credit side also. Please use your calci and do the needful. It is getting tallied, means each and every item is successfully recorded in the format. Even if you check the debit side, you can take total of amount. If you add up all the amounts, you will be getting again one more total, and that total is 42,30,000. So preparation of process account is going on, but we can't complete this account because three things are missing from the credit side, and for that purpose we need to prepare the equivalent statement. Equivalent statement always starts with part A, and that part A is a cost of a material, cost of a labor and cost of overhead. Guys, be very careful whenever you are using weighted average method, entire material cost record after adjusting the normal loss. Material cost, material is a milk, and very first material cost associated with WIP is 1,50,000, and in addition to that you have introduced further material which is amounted to rupees 15 lakh. In all, in your production process, material is there which is valued at rupees 16,50,000. There is no normal loss figure, that's why it is recorded. Then if you check the labor and overhead 15, 45 and 135, 45 plus 135, this much 1,80,000 labor and overhead, which is commonly called as conversion cost, is available with us. And in addition to that, 6 lakhs and 18 lakhs you have introduced recently. So total 25,80,000 is the material cost, labor and overhead cost. Once this is recorded, to calculate the cost per unit, we should record next thing of the statement, and that part of statement is called as equivalent units. I am underlining equivalent units. Equivalent unit, total free valuations are pending. So first we will show output, then we will show closing WIP, and finally we will show abnormal loss. My output, which is there on the credit side, is 1,18,500. And output is always 100% completed. 1,18,500 unit. It means you have incurred labor, overhead as well as material cost fully on all the units. Closing WIP percentage completion is given. You can see here it is 180%, and same percentage for your abnormal loss. So it is 27,000 and 3,000. 100% and 80%. 100% is full amount. That means material cost has been incurred on all the units, but labor overhead cost is incurred only to the extent of 80%. So it is 21,600 and 2,400. Once this data is recorded, you will be getting the number of equivalent units produced in the production process. You simply need to add all the values. These are the number of units which are there in my process, or which you completed, on which you have incurred the cost. You can say total number of units are computed. Sir, now what is to be done? Now for calculation of CPU, that is cost per unit, you only need to divide A with B, that is cost total divided by number of units will give you per unit cost. 16,50,000 divided by 148,500 will give you 11.11 something. You can check. Correct. Now once this is done, always go for 4 decimals, rupees 11.1111. Then in second case, 25,80,000 divided by 142,500, you are going to get rupees 18.1053 rounded off. That means for producing each and every unit, on an average approximately you spend 29.2164 cost. So this is my equivalent products per unit cost. Now once this is done, for the purpose of completing the process account, last part which comes is called as valuation. Valuation is also called as distribution cost. It is also called as apportionment of cost. And in apportionment of cost, you can start with any figure. Let me start with here closing WIP first. In my closing WIP, there are 27,000 units, that is 27,000 liters of milk is available. But as far as material, labor and overheads are concerned, you haven't incurred full cost on them. Labor cost you incurred on all 27,000 units, but labor and overhead cost you incurred on 21,600 units, that is liter, to be multiplied with the respective per unit cost. We solved so many questions in class. So this is the basic calculation. 27,000 into 11.1111 will give you the exact figure of 3 lakhs too. Labor and overhead 21,600 into 18.1053 will give you 391,074 approximately. when you add up both the values, you are going to get 691,074, and this is the value of closing WIP which I computed. Because of rounding offs, fractional differences are expected. So don't worry, we will adjust them. Immediately after valuing closing WIP, you should value abnormal loss after this, which is of 3000 liters. As far as material is concerned, you have incurred entire cost on all 3000 liters, but as far as labor overhead is concerned, you incurred cost only on 2400 liters at the rate of 18.10 C53. Please multiply this 3000 into 11.111111. It's 33333, and 18.1053 will give you 43453. When you add up these values, you will be getting 76,786 rupees as the value of abnormal loss. 76,786. If you want to calculate the balancing figure, you can easily do that. 42,30,000 minus 76,786 minus 691,074 is 34,62,140. Check whether we are getting the same value in valuation also. Here is the last valuation, and that is the valuation of output. My total output is of 1,18,500 liters, if I am not wrong, and that full output is fully completed when you value this with the total cost, which is 29.2164. 29.2164 into 1,18,500, you are getting here 346,2143. There is a difference of only 3 rupees, that is because of rounding off. If you take the full fraction, you will be getting the exact amount, and here is the solution of the question. Please check presentation which is given by the institute. Presentation may differ, but your answer will remain same. They have done this in a different way, but if you check the values are exactly same. Value first they computed for the units transfer, we computed it last. That's why there is a difference in the valuation. You can use any order will do. They have taken 3 decimals, I have taken 4 decimal. If you take the more decimal will give you more accuracy. And finally they prepared the process account. Fractional differences are expected. Even if there are differences in combination also, you will be getting marks. Single digit difference is allowed. I repeat, single digit difference is allowed. Be relaxed and solve. Any order valuation you can do, you can use. And this is the process costing revision test paper solution we just now understood. This weighted average method. Kindly practice FIFO method also before going for the examination. This is my personal recommendation. Associated with this chapter, there is one continuation to this chapter, and that chapter's name is joint product byproduct. Let's discuss the next question based on JPBP, again from JK's material. The joint product byproduct. KP Limited produces and sells the following product. Total 5 products are given: A, B, C, D, E. Their respective units are available, and along with that their split of selling prices are available. Means if you sell these products at intermediate stage, that is semi-finished product stage, you are going to get this much selling prices, and this is revenue associated with split of stage. And if you sell these products after further processing at final stage, then associated revenue is given. In this question, student commits only one mistake. They consider D. See, if you check, no, D's selling price at final is not given. It means D is not having selling price or sale value at final stage. No, it will give you 25 rupees if you sell this product at split off, and if you sell this product at final stage also, company is not further processing it, but at least 25 rupees you are going to recover from the product anyhow, at any stage, because company's policy is fixed, they are not further processing product D. Now cost of raw material is given, that is direct material cost, and manufacturing expenses are given. If you add them, 89,75,000 plus 13,67,500, you will be getting 1 crores 3,42,500, and this one is to be considered as joint cost, which is to be apportioned. It is to be absorbed on the product on the basis of their method is mentioned net realizable value. What is the meaning of net realizable value? When you multiply all these units with final selling price, you will be getting final sales value, correct? From final sales value, if you deduct further processing cost, the balance available with you is called as NRV, and NRV stands for net realizable value, and on the basis of NRV you should apportion the total joint cost of 1 crores 3,42,500. So for NRV method, first you should consider sales at final stage. From that you should deduct the further processing cost, calculate the NRV, use NRV's ratio for the apportionment of joint cost. This is what we are going to present in class. I always teach and ask student to use NRV method for presentation 7 columns, that is product name, quantity, final selling price, multiplication gives you 4th column sales value, minus 5th column FPC, 6th column is NRV, and on the basis of NRV you should bifurcate the joint cost. For the processing cost is given for A, B, C and E. D company is not for the processing, so A, B, C and E's FPC is given and fixed cost is also given. Sometimes student gets confused. What is to be done with the fixed cost? Fixed cost is not a product cost, it's a period cost, and period cost is not to be charged to the product, it is to be shown separately in company's total column. You are required to prepare the following in respect of the coming year. Only 2 points are there. Question is asking you to show the income forecast, and income forecast is nothing but profit for the company. Company's profit is asked, so we should calculate A, B, C, D is profit, and in addition to that we will prepare one more column, total profit. Assuming that none of its product are to be further processed, means if you are selling them at split off point, what will be the profit, that is asked. And in point number 2, question says you should prepare a statement showing income forecast, means profit of the company assuming that product A, B, C and E are further processed, means what will be the profit at final stage, and profit at split off point is asked in the question. But before computation of profit, you always perform first calculation, and is your apportionment of joint cost by using NRV. I would like to show this solution directly because you need not to spend much time on this. A, B, C, D and E, all the products are given, their sales value is computed. From sales value, post separation cost is FPC is deducted and NRV is calculated, and on the basis of available NRV, total joint cost is simply cross multiplied and apportioned between the product. Now after that they have computed the profit at your split off point. None of its products are further processed, means split off point profit. First sales at split off point is computed. Sir, how they computed sales at split off point? Quantity, when you multiply at split off point sale price, you are going to get sale value at split off. They only and only deducted joint cost from that. Sir, from where they took this values? Joint cost is taken from the first table. See here, apportionment of joint cost is available. When you deduct this from the sales value at split off point, you will be getting total product wise profit, but from that profit company's total fixed cost is deducted, and here is the company's profit, which is simply calculated totally based on calculator based formula and calculation. Statement showing income forecast is given, but this is the income forecast at final stage, so final sales revenue is recorded. Sir, from where they have taken this? Your quantity multiply by final selling prices. They deducted joint cost first, further processing cost, and after processing wise, product wise profit is calculated, and finally after deducting the fixed cost, the final profit is calculated. Now they have also find out the excess sales revenue and excess sales revenue is the difference between the split of revenue and your main revenue, which is actually not needed. And here is the end of this solution also, very basic sum based on joint. After this, next particular part is also very simple, and that is related to service costing. Very first question, JKSC material homework section is based on same. They have given you Panipat thermal power station related information related to electricity generation. Total electricity generated is 16,50,000. These are the total units given, and along with that they have given you some cost. 7 kilowatt hours of electricity generated per kg means when you use 1 kg of coal, 7 kWh electricity you generate. As per given information, total units of electricity generated during the given period are 16,50,000. So for that purpose, how much coal is used, we need to calculate. So 7 kilowatt of electricity is generated per kg of coal. So 1 kg gives you 7 kilowatt. 16,50,000 into 1 divided by 7 will give you certain number, and when you multiply that number by 4.75 you will be getting one cost, and that cost you need to record here. See, you can check here. Now for the purpose of calculating the cost, 11,19,643. Sir, how it is calculated? Same way, first they computed the unit and then multiply by 4.75. Depreciation charge is given 5% on capital cost. This is the easiest question. Very first you need to post this entire information in the statement. In the state solution they have bifurcated this and variable cost. So plant supervision, admin overhead, insurance, depreciation, these all are the fixed expenses, and then remaining expenses they have recorded. The only important point is coal cost, which I explained you, cross multiplication, and finally total cost is divided by total number of units, and finally they computed the per unit information. So simply this was the question related to the service cost. No transport industry, no public transport, no passenger transport, no food, no hot, no information related to toll plaza. Straightforward question based on the service sector of electricity plant. So thermal power station was the question's name, which was covered in JK Shah material. Here the question's name is Panipat thermal power station. Now thermal power station, according to JK book, that was the Chambal thermal power station, and here Panipat is given. Names are different, amounts are different, but there is no new concept. Out of 14 practical questions, we discussed 11 questions. Hope your confidence is getting boosted and you are getting ready for the examination. Let's have a detailed discussion about the next important chapter, and the chapter name is standard costing, fully based on formula and few concepts. Let's have a discussion. Here is the question number 12, standard cost. XYZ Manufacturing Limited, again same question is there in JK work section, question number 6. XYZ Manufacturing Limited had prepared the following estimation for the month of January. They have given you two raw materials, their respective quantities, rates, and their totals are given. But if you check the heading, no, they have given you estimation. Estimation means given data is your standard data. In addition to two materials, they have given you two laborers, and their respective estimated hours, rates, and totals are also given. Question further says standard loss in the process was expected to be 10% of total input material. So when you add up both the material, 10% material loss is expected. That means, sir, what they are saying, total of material is 1,600 plus 1,200. That means when you put 2,800 quantity of material in process, from that 10% quantity is expected to be lost. When you deduct that, it gives you 2520 as output. That means given output is for 2520 kgs. I simply added both the quantities, I deducted 10% and I computed the output. Same way, idle time of 5% is expected labor hour was also estimated. So this one is your standard idle time, and standard idle time should always be deducted from the standard hours, and standard hours are available with us. So there only I am adjusting 2000 minus 5%. For computation purpose, I will be considering 1900, and 1600 minus 5% is 1520. So these are the number of hours to be considered for first table. I always ask my student to prepare a table first and then apply the formulas. Things becomes easy because entire information along with all the formulas you prepare, take that from that table. At the end of the month, the following information has been collected from the cost accounting department. At the end of the month means this is something called as actual information. The company has produced 2960 kgs. This is your actual output. This much quantity is actually been produced, and for that purpose the material used and laborers worked along with their hours are available with us. Question is simply asking us to calculate few variances. If you check, first 4 variances are your material variances and remaining 3 variances are your labor variances. For solving this kind of question, students always prepare this kind of table, where first I will show you how we are going to prepare the material related table. We have 2 different materials available with you. The name of first material is DF and second one is CE. The amount is 1600 and 1200. This is something given in the question. Now they are available at different rate, 50 and 35. You need not to use calc as multiplication values are given 80,000 and 42,000. Correct? Now once this data is recorded, no guys, this is going to give you simply input, and the total input quantity in this case is 2800 and the total input cost is 1,22,000. Correct? Now you are not going to get same quantity as output, as certain normal loss is expected by the company, so we should deduct the normal loss from this, and normal loss expected is 10% and that one is 280, which has no realizable value as no information is available. When you deduct the normal loss from your calculation, the balance which you are going to get is your output. So 2800 minus 280 equals to 2520 output. That means given standard is for 2520 kgs, and the same point I discussed while explaining the sum. Correct? Now if you read further, see, there is no realizable value, so 122 I recorded same as it is. Here is the end of the given data. Sir, what is the meaning of given data? The given information says it's a standard quantity and information for producing 250 kgs. Now please check what is the actual thing. Actually 1800 and 1300 was the real input. So here I am recording 1800 and 1300, so total 2100, that is 3100 is the real input. And by introducing 3100 at different values, 40 and 30, same values I am putting here, 40 and 30, total cost is also available, 72,000 and 39,000. When you add this, you are going to get the total is 1,11,000. So this one is my actual valuation. Now we need to check, by introducing this much material, how much actual output we got, and actual output is given 2960, which means out of 3100 you got 2960. That means actually you lost only 140 kgs. Now try and understand. Question was saying 10% was the standard loss, but actual loss is not 10%, it is less than. This is the scenario of abnormal gain. Because of your efficiency, you have saved the loss and you produce the more. That means actual information is given for 2960 kgs. Now if you compare 2520 kgs data with 2960 kg data, that is not at all comparable, boss. That's why you should convert the given data at 2960 kgs. Sir, how to convert that? First of all, remember one thing. Your comparable standard and actual data's quantity of output should always be equal. Very important point. Simply you need to cross multiply. Sir, how to cross multiply? 1600 is quantity into 2960 divided by 2520 equals to 1 1879 approximately. Check your calculation. Then 1200 into 2960 divided by 2520 will give you 1410 quantity rounded off. When you add this 1410 plus 1879, you are going to get 3289 and our output is 2960. Find out the difference. You will be getting 329, exactly 10%, and here is the comparable data available with us. Once this data is available, your per kg per unit price remains constant. You only need to multiply it. 1879 into 50 is 93,950. 1410 into 35 is 49,350. This will give you 143,300, and the same value I am putting in my final column because scrap value is not available anywhere. 111,000 is the actual level. So first I drafted the format for material, and material data is with your first calculation, and calculation number 1 is material cost variance. Now try and understand what is material cost variance. In material cost variance, guys, you always compare total cost of material, and formula which you use is standard cost minus actual cost. We have standard cost in our statement, and standard cost of material is 143,300. When you deduct actual cost from that, your actual cost is 111,000 is 32,300 is the answer for your first calculation. 32,300. Please cross verify it from the suggested solution. Your total calculations are shown separately. 32,300 is the cost variance which is given. They haven't prepared similar type of table. They have adjusted quantities by using certain formulas. Formulas understanding is little difficult. That's why I shown each and every calculation by using the table. Material price, you should compare standard price and actual price, and then you should multiply it with actual quantity. See, standard prices are available in our table. My standard price is 35 rupees and 50 rupees, right? And actual prices are 40 and 30. I'll show you the calculation here. Material price variance is standard price minus actual price into actual quantity. We are dealing with two material. First one is DF, second one is C. The standard prices of materials is available in our table. You need not to check your question. It is 50 and 35. From your standard prices, you should deduct the actual prices, and actual prices are 40 and 30. Everything is available in the table, you can see. Actual quantities are also available. Actual quantities are 1800 and 1300. Simply you need to multiply this. You are going to get your answer. So it is 18,000. Positive answer is favorable. That means you set the estimation to spend 50 rupees. Actually you spent only 40 rupees. There is a saving of cost. 35 minus 5 into 30 is equal to 6,500. It is also favorable. Overall favorable performance of the company. It's a good performance of the company. 24,500. It is favorable answer. You can check here. 24,500 is a favorable. When answer is positive, that is good for the company. Company saving the cost. They have saved the cost according to the given data. Third one is material mix, and then one is material yield. Whenever guys you are calculating mix and material yield, always write down formula first. Material mix variance is equal to revised standard quantity minus actual quantity into standard price. Already multiple sums we solved on same basis. Formulas and other derivation also we discussed in class. Now after this, material yield variance is standard quantity minus revised standard quantity into standard price. So same formula I am using, only one point is different. DF and C are the materials which I am using. Now this revised stuff is not available with me. but actual quantities are available with me, and actual quantities are 1800 and 1300. Even standard quantities are available with me. Standard quantities are 1879 and second actual quantity is 1410. So whatever data is available, I substitute that. Here it is to be multiplied with the standard prices. They are 50 and 35. The thing which is missing is RSQ, and RSQ stands for revised standard quantity. To calculate revised standard quantity, D, F and CE, two materials we are using. Now first of all, check students what is the standard proportion of them. It is 1879 and 1410. If you check the table, this proportion is written over here. That means if you are putting 3289 input, 3289 input, out of that 3289 input, this is the proportion of your standard quantity of the two different material. Actual input is not 3289. See, no, actual input is 3100 only. Input which is estimated by the company and input which is actually used by the company. There is a difference. Input has to be same. Then only comparison can take place. So to bring the standard input to the actual level of 3100 quantity, sir, from where you are taking the figures? You know, I have highlighted it. So first I have taken standard inputs proportion and then I am bringing that down to the level of actual input. When you cross multiply it, you will be getting the figures. 3100 into 1879 divided by 3289 equals to 1771. Then 3100 into 1410 divided by 3289 equals to 1329, rounded off figures. So these figures I have computed and I am posting them in my formula. 1771 and 1329. 1771, 1329. Let's calculate the pending calculation. 1771 minus 1800 into 50 will give you 1450 minus is adverse. 1329 minus 1300 into 35 is equal to 1015. Positive answer is favorable. When you net off these figures, minus 1450 plus 1015, you will be getting 435 negative, and 435 negative is adverse. You can see your calculation and answer. Everything is in front of you. You can use any method. The method which you have learned in your class, same method you have to follow. And the last calculation, 1879 minus 1771 into 50 is equal to 5400 favorable, and 1410 minus 1329 into 35 will give you 2835 favorable, and when you add up this both the values as both are positive, you will be getting 8235 favorable answer. Even you can cross check, 8235 is done. So nothing is difficult. Everything we have done for multiple times in class, and the same stuff is covered in the RTP. This RTP is really amazing, which is going to boost your confidence, which is going to give you more and more practice of the all important questions we marked while solving in class. Let's have a discussion about the labor cost, labor efficiency and labor yield variance. For this purpose also, I will be preparing this table. Now table gives you a great help for understanding the sum and for solving the sum. Let's check the standard data. In standard data, I am considering the net values of the hours after adjusting the idle time, which was standard 1900 and 1520. Laborer names are skilled and semi-skilled. It's 1900 and 1520. Only important point of sum. Respective rates are 40 and 25. You need to multiply them again. 1900 into 40 is 76,000, and 1520 into 25 is 38,000. Correct? Understood what I did? After this, go to the actual table, and from actual take the actual figures 2400, 1720, Actual prices are also given 35 and 20. And multiplied values are also given 84 and 34 400. Table preparation is very important. Now here total is required. Guys, please don't dare to write input in labor table. In labor table you are not inputting your worker in machine, you are inputting material in machine. So input output comes only in the table of material, not in the table of labor. Here simply you need to record total. So 1900 plus 1520 is 3420, and the total cost according to the given standard to be spent is 1,14,000. But is, yeah, this is the cost of 2520 kgs. We need to revise it. We'll do that later on. First let me take the total of actual things. It's 4120, 84,000 plus 34,400 is 1,18,400. Sir, how to calculate? For calculation purpose, again cross multiplication is needed. 1900, listen to me very carefully, 1900 into 2960 divided by 2520 will give you one fractional value. It is 2232 at the rate of 40 is 89,280. Then 1520 into comparable standard output 2960 divided by 2520 equals to 17585 at the rate of 25. 1785 at the rate of 25 will give you 44,625. Done. Pause the video, revise the video, again rewind the video, reduce the speed, increase the speed, and listen to me very carefully for again and again how I am calculating this standard based on comparable things. That is very important. Student commits mistake in that calculation only. So you have to be little careful with this. 2232 plus 1785 gives you 4017, and 89,280 plus 44625 gives you 133905. Let's see what is asked in the question. Question is asking us to calculate labor cost variance, and labor cost variance is standard cost minus actual cost. My standard cost, always you should consider the comparable standard, is 133,905 minus 118,400. Company is really performing great. Company has saved 15,505. So 15,505 positive answer is favorable. You can cross verify this. Your answers are given in the question. It is 15,505. Yo, no chance of any error if you follow this technique. 100% guarantee of full marks if you follow this method. After this, if you read efficiency variance, the efficiency variance formula I will solve here. I will show you the calculation. Efficiency variance is a standard hours minus actual hours into standard rate. Labor efficiency variance you should calculate for both the laborers, skilled and semi-skilled. Their standard hours just now we computed in table. They are 22321785. 22321785. Their actual hours are also available with us. Actual hours are 2400 1720 to be multiplied with their standard rates, and standard rates of them are 40 and 25. 2232 minus 2400 into 40 is negative 6720. Negative is adverse. 1785 minus 1720 into 25 is equal to 1625. Positive is favorable. When you net off this, you will be getting one negative figure as your final answer is 5095 adverse. Sir's magic. Sir's magic. 5095 adverse. We got the answer. And only one pending computation is there, and that one is labor yield variance. For that purpose we need to calculate RSH. First let me write down the formula. Labor yield variance is revised standard hours. It's standard hours minus revised standard hours into standard rates. Skilled and semi-skilled standard hours are available 2232 1785. You can analyze this thing, and after analyzing the things you can decide exactly what is the difference between efficiency, yield and mix. Efficiency is sub bifurcated into two parts. First one is mix and second one is yield, where formula which you use is same, only one difference is there, RSH. If you substitute RSH at the proper space, you are going to get the answer of this calculation. RSH is not available. Sir, what is RSH? It's a revised standard R to be multiplied by 40 and 25. We need to calculate revised standard R. Sir, how to compute that? Skilled and semi-skilled. Standard hours are 2232 and 1785. Correct? No? But standard proportion is what? Now look at this proportion. Out of 4017 hours, out of 4017, again go back and check from where I am taking the figures. Out of 4017 hours, this is the standard bifurcation of number of hours associated with skilled worker and unskilled worker. Actual number of hours are not same. Actual number of hours are 4120. There is a difference of 3 hours. So we need to bring that difference to the level of actual 2120. Sir, 2120 is the actual total. Yes. So we need to calculate 24120. What will be the revised number of hours needed? So simply I have taken the calculation 4017, and that 103 rupees, the 3 hours difference we need to adjust 4120. Let's calculate. Is it 2232 into 4120 divided by 4017? 2289. 4120 into 1785 divided by 4017 is equal to 1831. So these are the hours which you need to substitute here. 2289, 1831. Let's solve this. 2232 minus 2289 negative 2280 adverse, and 1785 minus 1831 into 25 is equal to 1150 adverse. Both the adverse will be added and you will get 3430 adverse as your final answer. 3430. And this is the end of the solution. Hope you understood this, all the calculation. Guys, this table is going to help you a lot. Spend some time on understanding and preparing this kind of tables which are associated with material variances, your labor variances, overhead variances and sales variances. Let's begin with an and next question based on marginal costing. So let's start with the next sweet pick. Marginal costing fully based on formulas and basic concepts. So question which is covered in RTP is also very easiest question. The following data are available from the budget records of Fine Sign Women's Handbag Company for a forthcoming budget period. They have given us selling price per unit followed by variable cost. In variable cost, cost of material, salesman commission and total variable cost is also given. So total variable cost per unit is 800. When you calculate the contribution is 200 rupees per unit. Sales minus variable cost gives you contribution. Annual fixed cost given, total fixed cost is also available with us. So at present, if you want to calculate PVR, that is profit volume ratio is 20%, which is contribution divided by selling price into 100. So it's 200 divided by 1000 into 100 will give you 20%. Although the firm manufactures bag with different styles, they have identical purchase cost and selling price. That means it is clearly given that purchase price and selling price will not change. Question requirement number 1 says we are asked to calculate break-even point in terms of unit and value. If you are calculating break-even point, guys, always you should consider fixed cost as a numerator. When you divide it by contribution per unit, you get units, and same formula, fixed cost divided by contribution per unit, where you computed units, if you multiply with selling price per unit, you get the value. You can put the values here. Fixed cost is 23 lakhs. When you divide it by contribution per unit 200, use your calci. 23 lakhs divided by 200 equals to 11,500 units. And if you want to calculate value, we computed 11,500. You can check here, 11,500 is computed answer. And for calculating the value, you should multiply 11,500 with the selling price of 1,000, and when you multiply it, you are going to get 115,000,000 1 crores 15 lakhs as your revenue. You can even cross verify. 1 crores 15 lakhs revenue is given. It is very simple and straightforward question. There is little twist included in point number B. If the store manager is paid 1% commission on sales, 1% commission means your selling price is 1,000. When you multiply this 1,000 into 1%, you will be getting additional commission. 1,000 into 1% is 10 rupees. Now commission is on sales, so because of commission your variable cost will increase by 10. What was the variable cost initially? Variable cost initially was 800. Now this will become 810. So because of this, now things will little change. SPPU minus variable cost per unit, selling price, there is no change, but variable cost per unit is now 810. When you deduct this 810 from your calculation, your contribution will become 190 and PV ratio would be 19% if you want to calculate then. Now this value, if you don't want to multiply this with selling price, alternatively you can use fixed cost upon PVR formula also. Choice is yours, depend upon the given information. In this case, question is asking us again to calculate break-even point in units and value. So now break-even point 23 lakhs fixed cost divided by contribution per unit is 190. So 23 lakhs divided by 190 will give you 12,105 units approximately. You can check here, 12,106 units approximately you are getting. They have rounded off the figure. And when you multiply this by 1,000 rupees, you are going to get the value in amount. It is 1 crore 21 lakh 5,263. It is the simple straightforward calculation. Fixed cost divided by contribution per unit gives you quantity, and fixed cost divided by contribution per unit into selling price per unit gives you final sales value. Even you can use PV ratio for the purpose of solving this. And the last part of the sum, point number C, is little important. It says if the firm decides to pay a fixed salary of rupees 9 lakhs. Now what was the fixed cost earlier? 23 lakhs. Now company is paying fixed salary of 9 lakhs in lieu of sales commission. Means instead of paying sales commission on 50 rupees per unit basis, they are giving salary. So because of this, your fixed cost would increase by 32 by 9 lakhs, and revised fixed cost will become 32 lakhs, and your cost of material will be the only variable cost with you. Means because of third scenario, your fixed cost total would become 32 lakhs. Your sales price per unit is not changed. Variable cost per unit will change, and because of that contribution will change. Selling price is 1,000. Variable cost per unit is now 750. That means your contribution is 250 per unit. Question says again break even point. Now for break even point calculation, 32 lakhs we will divide by 250. Now this is 12,800 answer. You can cross verify, and when you multiply these units by total selling price, you will be getting 1 crore 28 lakhs as your sales revenue. This is the end of third point. But there is one important paragraph covered. Considering break-even point in requirement number A. So what was the original break-even point which we computed? Original break-even point was simply fixed cost divided by 200. So 23 lakhs divided by 200, we calculated 11,500. Now question is asking us to consider that calculation again. If the store manager is paid 2% commission on each bag sold in excess of the break-even point, what would be the profit if 20,000 bags were sold? Little tricky. I would like to explain it by using the information which is given in suggestion. Your annual break-even point according to your calculation was 11,500, correct? The sales volume to be achieved is 20,000 bags. 20,000 minus 11,500, 8,500 is called as over and above break even, and whenever you say over and above break even, that part is called as margin of safety, because your total capacity sales is divided into two parts, break even point and margin of safety. Your total sale is now 20,000, and out of 20,000, 11,500 is break even. That means remaining 8,500 is margin of safety. Contribution on sales beyond break even, if you want to calculate, revised contribution per unit is 200. That is 2% is the rate of his commission, and 2% of selling price means 1000 into 2%. His commission would be calculated like this. Now 1000 into 2% is 2000 rupees, and in that case, if you want to calculate the revised contribution, your contribution would further reduce, correct? No, what I am saying, your contribution per unit, try and understand first, your contribution per unit at original stage was 200 rupees, correct? Now if you are giving extra commission to your salesman, in that case your contribution will further reduce. Now 2% commission in excess of break even point, if you calculate, your 2% of 1000 is 20 rupees, and 200 minus additional 20 rupees, 180 will be the revised contribution. Hope your concept is getting clear. Your first contribution was 200, now you are giving 20 rupees extra variable cost to your sales manager. So because of increase in the variable cost by 20 rupees, sir, how 20 came? 2% of 1000 is 20 extra commission we are paying to our salesman, and because of extra variable cost, your contribution will reduce by 20 rupees. This is the revised contribution. So if you want to calculate the margin of safety, simply on 8,500 units according to 180, you are going to get the total profit, and here is the calculation end. Now if you read that point, they have only asked you what would be the profit if 20,000 bags were sold. So from 20,000 bags, existing profit we removed, and from 8,500 extra units which we are selling, we computed profit on only and only those units by using this kind of calculation. This is the end of your marginal costing. The last chapter which is covered in practical illustration is budget and budgetary control. Again, this is the question from classwork section JKC. First sum from classwork is similar type of question, and similar figures are given. Let's have a discussion. EDF Limited produces two products using skilled labor and two types of material. Means laborer is of one grade, but your material is of two different types. Shown below the information for the next month's budget, monthly information is covered. So two products you are producing, product A and product B. Budgeted sales units are given. Budgeted sales units is the sale quantity. Budgeted material consumption per unit, consumption of material is not expressed in full, it is given on per unit basis. That means if company wants to produce 1 unit of A, how much material is to be consumed? Then material to be consumed for producing 1 unit of B is also given, and along with that standard labor hours are also given on per unit basis. Means budget is available, estimation is available, but estimation is available only and only for 1 unit. We need to calculate it for full. Material X and material Y cost 8 and 10 per kg, and laborer hours paid 30 rupees per hour. Overtime premium is 75%, that means 30 into 75%, extra 22.5 premium you will be giving to your worker. That means rate per hour is 30, but OTRPH is equal to 30 plus 70% is 52.5. There are two different rates. If a worker works for more than 55 hours a week, then only overtime premium is, and there are 400 direct workers. The target efficiency ratio is given. Sir, what is efficiency ratio? How much actual time they are going to take is 85%, and this is something very important. When workers' efficiency is 100%, that means whatever time is allotted to them, they will be taking same time. When their efficiency is more than 100%, in that case they will be consuming less time, and when their efficiency is below 100, that means workers are inefficient, they will be requiring more time than the given time. Which means if I am giving you 1 hour to complete the production, if your efficiency is less than 100%, obviously you will be completing the given task not in 1 hour, certain extra minutes you will be taking, and this is the meaning of this efficiency ratio, which is 85%. In addition to this, they are going to take actual number of hours which are more than the standard hours because they are less efficient. In addition to that, non-productive downtime. Sir, what is non-productive downtime? It is called as idle time. Is also budgeted at 15% of the productive hours work, and productive hours work are the actual hours work. So first, standard and actual hours are not same. Actual hours will be more than the standard hours. Let me give you one simple example here. If you are asking me to complete any task in 100 hours, so this is not actual hours, this is standard hour. If I complete your task in 80 hours, that means my efficiency is 120%. You can calculate on your calci, you are going to get my efficiency of 125%, correct? But if I will be taking more actual hours, in that case, suppose I am going to complete this task in 120 hours. So 100 divided by 120, my efficiency is 83.33. Whenever efficiency is less than 100, in that case your actual time will be more than the standard given to you, and in addition to this time, company is going to pay for idle time also, because idle time is unproductive time which is wasted because of uncertain events, which is payable in nature always. There are very important sentence. There are 4-6 days weeks in the budgeted period. There are 4-6 days weeks means there are 4 weeks covering 6 days. That means your month is of 24 days. Now if this sentence is not given in the question, in that case your month is equal to 30 days. But because of this information, now you have to consider your 1 month is equal to 24 days, because there are 4 weeks covering 6 days, 6 days, 6 days, 6 days each. So total 24 days in the budgeted period. It is anticipated that sales and production will occur evenly throughout the whole period. It is anticipated that stock at the beginning, means opening stock for the period, is given for product A and B. These are the opening stock of finished goods, and remaining are the opening stocks of raw material. The anticipated closing stocks will be considered at 5 days sales and 10 and 5 days consumption. Now closing stock is not given on the basis of number of units or number of kgs. They have expressed it on the basis of number of days. So to calculate this, they have asked us to prepare the purchase budget and wages budget. But bachcho, before preparing purchase budget and wages budget, we need to find out the number of units to be produced, and production budget can be prepared by using simple formula where you should start with sales units. In sales units you should add closing stock, and after adding closing stock we should deduct opening stock, and this budget need to prepare for both the products. Now how to calculate production? In cost sheet chapter, quantity produced formula we learned, that one was opening stock plus quantity produced minus closing stock is equal to quantity sold, correct? Here we are simply going in a reverse order. As we are asked to calculate the production quantity, for that purpose we will start our calculation from sales. We will go in reverse order, sign will change, we will add closing stock and we will deduct opening stock. Now as far as sales units are concerned, sales units are given in very first table, product A 4080 and product B 6120, correct? Now this much quantity 4080 and 6120 quantity we are going to sell in the period of 24 days. If I am not wrong, budgeted period is given, no, 24 days. Question says of A and B is 5 days requirement of sales. So only you need to cross multiply. If 4080 units are for 24 days, what are the number of units for 5 days? 4080 into 5 divided by 24 will give you 850 units. 6120 into 5 divided by 24 will give you 1275 units, and here closing stock is completed. Same way, opening stock is given in the question 550 and 350. When you adjust this quantity, you will be getting your production. 4080 plus 850 minus 550 is equals to 4380. 6120 plus 1275 minus 350 is equal to 7045, and production quantity is calculated. Student asks, sir, why production quantity is calculated? Because without knowing the production units, we won't be able to calculate the consumption units, and without consumption unit, we won't be able to calculate the purchase unit. So this is the ingredients we are preparing for our main recipe. Question is asking us to prepare purchase, but purchase is the element which comes from RMC. RMC can be computed only when you are aware about the number of units to be produced. So let's calculate RMC. Sir, how many materials are there? 2, no? X and Y. Now first of all, how to calculate RMC? They have given you 1 unit wide consumption. You can see here. Now 2 products you are producing. For product A, every 1 unit of product A and every 1 unit of product A requires X material as well as Y material. You can see 8.5 and 6.8 are the requirements of material. So I am recording here 8.5 and 6.8. This is the requirement for 1 unit. Are we going to seriously produce 1 unit? No. Just now we computed 4380 units of X and 7045 units of Y. Cross multiply. 4380 into 8.5 will give you 37,230 kgs or units of material, and 7045 into 6.8 will give you 47,906 of material Y. This is the requirement of material X and Y for producing A. Now for producing B, let's check 1 unit requires how much material X and how much material Y. Now it is also given in the question material 5.1 and 10.2. 5.1, 10.2. Then for 4380 units, sorry, here I committed one mistake. I took the wrong quantities here. 4380 is A's quantity and 7045 is B's quantity. So product wise quantity you must consider. Now if you are planning to produce 4380 units of A, how much material is needed? That you need to calculate. 4380 into 6.8 is 29,784, and 7045 into 5.1 is 35930 rounded off. And 7045 into 10.2 is equal to 71859. When you add up both these values, you will be getting total material needed, and total material needed in first case is 73,160, and in second case it is 1,01,643. Sir, what you computed? This is RMC. Hope you remember RMC's formula. RMC is equal to opening stock plus purchases minus closing stock. Sir, what you said? I just said RMC equals to opening stock plus purchases minus closing stock. Question is asking us to prepare the purchase budget. For that purpose, this closing stock we will add to RMC and opening stock we will deduct from RMC. This will give us purchase quantity, and when you multiply purchase quantity with purchase price, you are going to get the purchase value. This is the easiest calculation. You can see here, first budget, these quantities are calculated. In second working note, material requirement is calculated, and this is the material requirement in all which we computed here, 73,160, okay, and 101,643. So here We are adding closing stock, we are deducting opening stock. The same formula will give you purchases, and here purchase quantity you are going to get. Now question comes, how to calculate closing stock. Now see guys, this material requirement 73160 is the requirement for 24 days and 101643 is the requirement for 24 days. Question says this stock is of 10 days of consumption and 5 days of consumption. Then for 10 days and 5 days we need to find out the answer. 10 days and 5 days, if you cross multiply this, you are going to get the answer, and the same stuff is given here. Once you are going to take total, this is going to give you the quantity to be multiplied with the rate of material, and rate of material is given in the question. It is 8 rupees and 10 rupees, and after multiplying this, here will be the end of your purchase budget. You can see how this started. They merged both the workings with their budget, and we shown it separately. Hope your concepts are getting clear. Wages budget. Okay. Now units wise, number of hours required are given. 1 unit require 5.1, correct, and second 1 unit requires 8.5. What we have decided, how many units we have decided to produce in our solution, we have already computed. Number of units to be produced are 4380 and 7045. 4380 7045. This cross multiplication will give you total hours required to complete the production. 59,883, correct. These are the number of hours required to complete the production. See here, number of hours are computed 22,333, same, and in second 59,883. see, we have computed. Okay, now please try and understand the next part. Now these are the standard hours required. They have given you efficiency ratio. Hope I am not going fast. First we prepared production budget, then we computed RMC. After adjusting closing opening stock with RMC, we completed with purchase. Now we are on wages budget. For wages budget, efficiency ratio, first I computed the standard hours. Efficiency ratio says standard hours upon actual hours into 100 gives you efficiency, correct. Workers efficiency is 85. Standard hours are 22,338. We need to find out the actual hours needed to complete the task. So 22,338 into 100 divided by 85 will give you 26,280 hours for first product. For second product, 85 is equal to 59,883 divided by actual hours into 100. So 59,883 into 100 divided by 85 is equal to 70450 or 451. Okay. When you add up these values, you are going to get total number of hours actually needed 96,730 or 31. These are the actual hours, correct. You can check here. Total actual hours are computed here. Total number of actual hours according to efficiency you need to compute. Once that is done, after calculation of these hours, you need to calculate, see, 26,280 computed, and finally 70450 is also computed. In that we are going to add 15%. If you add 96,730 plus 15%, because 15% is a non-productive which is payable, you are going to get the payable hours in this case 1,11,240 approximately. So 1,11,240 hours are payable. Now these hours are not payable at same rate. Sir, everything is going bouncer overhead, sir. Hope guys you are understanding the concept. What I am doing. First I calculated standard hours. I put efficiency, computed the actual hours. I added 15% idle time to the actual hours, and after calculating the actual hours, now rates are different. So first I need to calculate the normal hours, and then I am going to calculate the overtime hours. Sir, how to calculate normal hours? Question has given you the information about the normal working hours also. See here, there are 45 hours a week. 45 hours a week, that means 45 into 4 weeks, and number of workers working with company are 400. 45 into 4 weeks into 400, 72,000 hours are payable at the rate of 30 if I am not wrong. See, normal RPH. and the balance are out of 111 240, 72,000 are paid. Balance 39,240 hours are to be paid at 52.5. These are the rate wise calculation. You can see here they have done the same. These are the normal hours. These are the premium hours. These hours, when you multiply 72,000 into 30, you are going to get this figure, and 39,240 into 52.5, that is the premium rate I multiplied, I computed this. Total wages payable are available with us. Hope you guys are understanding this. Okay. After this, let's read. This is the end of budgetary control. This question is the full-fledged functional budget based question. No flexible budget, no cash budget, no any other budget, only functional budget is given, and that too related purchases and wages. But for these two budgets, we prepared first two budgets in working, and they were production budget, and second one was your consumption budget. Let's check the last part. Suggest the unit of cost for following industry. Whenever you are dealing with the transport, this is the question from simply chapter named service costing, and in that chapter various industries we have discussed. According to that, transport industry, if you are dealing with public transport, that is passenger transport, then the unit which we use is passenger kilometer, and if you are dealing with the goods transport, then you should use ton kilometer. In power generating cases, you should use HP hours or kilowatt hours. If you are dealing with the hotel, you should consider room days. If you are dealing with the hospital, you should consider bed days. If bed days are not available, they are also called as patient days. In steel manufacturing industries, you need to consider the tons. In coal mining, again you need to consider ton or any other thing which is suitable for that industry. You can see, in given information, this is the same thing given. Professional services we charge on hourly basis. Gas we produce on cubic feet basis. Engineering related contract. Oil we compute on barrel, ton, gallons, etc. basis. All are the simple things of theory. Now job costing, batch costing, integrated system, and everything is asked. You can read this kind of theory. This is the optional question. Students, because total 14 practical questions and a major question we solved also. Now hope this RTP revision and discussion will help you a lot for your examination. I am wishing you very all the best for your upcoming examination. Hope you guys are going to secure exemption in exam, and you are going to rock the intermediate level. Hope to see you all at final level. All the best. Thank you very much. Take care.